For the time being, let's address earnings and numbers that we saw from Kalpataru projects. That is the next management on our radar. It was a pretty good quarter for the company. Revenue growth was driven by robust execution, and it's been a pretty steady performance for them in their key segments. Amit Oplenchwar, director at Kalpataru Projects, is with us. Amit, thank you very much for joining in. So let me just quickly go over some of the key numbers. You've actually increased your revenue guidance from 20 to 25% to now you think revenue will grow 25% plus this year. And you're also looking at a stronger order book guidance. You're saying the order intake is going to be more than 25,000 crores. So tell us where the optimism is coming in from. Which are the segments that really seem to be firing for you?
Thanks, Surbi, and clearly a great win for India, lifting the World Cup, and your T-shirt, all of you reflects that. So we've in the same line. I think we've had a great quarter. We're at our highest ever Q2 revenue and Q2 profits, and that's very heartening to know. As you said, it's been an all-round performance. Our transmission and distribution sector is doing exceedingly well. Our building and factories, the order spends on single projects are going up 3 to 4 times as they used to be in the last couple of years. Our oil and gas business has shown large growth compared to last year and the year before that. And our urban infra businesses, which we've been seeding now for the last 2-3 years in terms of building capabilities for the future, are all joining the show and contributing to this growth of the company in this quarter and at H1.
Okay, morning, Prashant here. So, you've given us the guidance for this year. What about the top line growth? What does all of this sort of mean for margins? What's the guidance there, and what are the levers at play which could allow you to improve margins as well?
So, 3 things. First, we said we will try and get to our revenue growth so we've already gone to between 20 to 25%, and obviously we've grown to the higher band of that, and now we've guided for 25% plus at the end of the year, both console and standalone, and that obviously adds to the margin as well when you do more revenue than you had planned. We had already planned last year that we should try and expand our margins. We said on a console level, we'll try and go 100 bips more at a PBT towards the end of the year, and at H1 we are already at more or less 100 bips more than where we were last year. We've been again focusing on balance sheet and trying to reduce our net working capital days. Our debt levels have gone down further again. We are borrowing cheaper again, getting to contributing towards our margin profile. The execution has been very low, looking at close to 5.5% on a standalone PBT for the end of the year. Our debt to equity now on a standalone, probably one of the lowest, it's at 0.29, which pretty much debt free when it comes to our business. And I think all of these factors with better margin profiles in sectors as T&D, BNF, etc., a lot of demand in the marketplace, we are able to get better margins. And I think all of these put together are contributing towards the margin expansion.
All right. Hi, Amit. Good morning. Good to see you in. I recall having a chat with you a year or so ago at our JLS event. And you sounded very optimistic, and seems like the numbers are flowing through. So good on you. Just to focus on one segment, which is a relatively smaller part of your business, the water segment. Out there, payments, not just for you, but for various other industry players, have been slow. Could you tell us what is the outstanding in terms of payments coming in from the water projects? And also, I think, what is the trajectory with regard to here now? You were putting in some money, investing in these projects. Will you continue to bid?
So, we are cautiously bidding. We've had a small degrowth in revenue for the water business this year, and that's primarily an industry problem at the moment as we speak. The government is trying hard to unlock the past dues for us. These numbers are close to 800 crores. If you would have got these numbers, our revenue would have been even higher. The story, if you ask me, remains intact. At the end of the day, water is a huge part of being a developed nation, and I think government is fully committed to further putting money in the water sector. I think this was it happens in our business sometimes. The sector goes slow, or if you look at, except the last 2 years, the water business grew at 20, 30, 40% CAGR for most companies in the sector. So I'm not overtly worried about our payments. We've been guaranteed by all states that these money should start flowing in the next 1, 2, 3 quarters. And we are confident of that. I think structurally the sector itself is solid. As we told you last year as well, we've been focused on building capabilities of the water business outside of India. We are bidding now on in a couple of geographies, and I think in the next 2 quarters we'll be happy to give you some good news on that as well, as we take our water sector more global and not just India centric.
Just one word with regard to these payments. I believe a couple of governments you have outstanding from UP and Jharkhand, if I got that correct. You all have been assured that the payments start coming in from November. Is that correct? Because I was in touch with various.
The government has always said that these payments will start coming. Obviously, they've not come at the pace that we anticipated that they would. But because they are central government projects and these monies are, central government funds, few months here and there. But we are sincerely hoping that by the end of H2 and beginning of first quarter next year, these monies should start getting normalized and the backlogs getting cleared.
Got it.
Okay, all right, Amit, we'll leave it there. Thank you very much for joining us. Good luck, good performance, and we wish you all the best of luck.
Thank you so very much.
To execute. We'll take a